All right, folks. So now we discuss the 4 hour to 5 minute alignment. All right, so it's going to be a 4 hour bias with a 5 minute market profile. All right. So we have here market profile, euro bearish, breaking lows, retesting them and rejecting highs. So we expect euro to smack into this order block and then decline down to these lows over here and then over here. Right? So the profile is bearish. The bias is bearish. Now what we do is we try and catch a slice of a 4 hour candle. 1 hour as well, but now we're going to first discuss the 4 hour, right? So we have here a stab into a key level, these equal highs over here, right? With an SMT forming with a dollar. And SMTs play an important role in the formation of highs and lows. We have a massive decline. We have a break through this candle. We stab back into it and fall further, creating an order block. All right, FVG. An order block. Now, the process is as follows. You're going to mark the 4 hour key level, in this case the order block, right? And when it's a thick, stubby order block, then you can take the open as the key level. When it's a long wicked order block, then you can take the wick to the opening price, right? So opening price, order block. And you go down to the 5 minute to catch this move. Now, whenever you have an order block, a correct, well-chosen order block, then one guaranteed trade, no matter what your bias is, one guaranteed quote-unquote trade is trading from the order block, the key level in this case. Trading from here, so you get this. You get a massive decline. You get a consolidation, right? Consolidation, accumulation, manipulation, and distribution at least into the beginning of the retracement leg, right? Which is right here. That's the concept. Now, applying it over here, you have a 5 minute market profile, breaking lows, retesting them. So any pop above an old high is going to be expected to be a false rally, right? And the same exact concept over here, which is order block. We can expect us to smack into the order block, the key level over here. I'll just write it down, OB. And create a 5 minute range over here. And we have a trade idea from here until the beginning of the retracement leg into the key level. And if that was a mouthful, you might need to watch it a few times, right? So you got this accumulation, manipulation, creating the high of the day during the kill zone, quote unquote, right? In the shape of a range. Get the opening price of the 9 hour candle, right? Because we're now dealing with the 4 hour candles, and we're essentially treating the 4 hour candle as a daily candle, right? So accumulation, manipulation, and distribution, right? Accumulation, manipulation, age range of here, manipulation, and here's another fractal thing I look for, is I look for the manipulation to happen, and it's not just gonna smack back down. Manipulation, and then within the manipulation, there's an accumulation, a manipulation, and a distribution, right? In this case, a 1, 2, 3 drives pattern. 1, 2, and 3, right? And then you can expect a crash on this time frame, right? So that is the 4-hour method. Now we move on to the 1-hour method, and this can be applied to any 4-hour key level, a breaker, an order block, rejection block, whatever, right? However, I like this one specific model, this 4-hour order block to retracement leg low model, especially with order blocks, which are ranges broken and retested. Range, consolidation, expansion, retracement, expansion, right? So we're blending a bunch of concepts together. Now we move on to the next one, which is the 1 hour to 1 minute market profile, right? Let's choose an easy example to begin with, right? Because when learning a concept, then you want to start with an easy example. And again, you'll notice that when this model works, then it's because you're trading outside of a kill zone, right? I don't like using the word kill zone, right? Or the ICT kill zone, because it's simply the open, high, low, and close times. However, they do hold their weight as good times to go hunting, right? So same model, order block, right? The high of the week formed over here on Tuesday. Monday range and Asian range. Extremely high probability conditions, right? You're smacking back down, and this is an FVG, same exact model over there, right? The order block that rebalanced in FVG is a high probability order block. 1 hour key level with a 1 minute market profile, right? In this case, you mark out the 9 o'clock candle, right? All right. And here's your key level. Here's your 1 hour order block, and this is your trade, which is going to finish as soon as you reach down here, right? Got the order block created. You got the open. Now we're treating the 1 hour candle as a daily candle, right? So accumulation, manipulation, formation of a range, manipulation, range, SMT or turtle soup, and then distribution. Same thing, which is order block. Remember? Order block. Formation. Smack into key level. And back to the beginning of the retracement leg. And that is the model. Right? Common questions or common mistakes which you may make in this model is blindly trading any random order block while not keeping in mind the market profile and the higher time frame bias, because this is all the best trades are going to happen in alignment with the higher time frame bias, right? And they're all going to happen at the same time. So if price is not moving the way you want it to move, then you're either not aligned with the bias, the correct bias, which is why what's supposed to happen at a certain time is not going to happen the way you want it to happen. For example, if you're expecting a manipulation but you're incorrect on the higher time frame bias, then you're going to get a distribution, right? And that is how you get wrecked on a lot of false turtle soups, right? That's what happens when you blindly buy highs and lows. Buy highs and sell lows. Buy lows and sell highs, excuse me. It's been a long day. So yeah, this concludes the model. Your homework is to go back in time, because history of the charts is a gold mine, and it is basically a time-traveling machine you have between your hands. Go back in the charts and mark 9 models of each of these. The Asian range, keeping in mind the breakout and retest of the Asian range, and this model, and the application of this model fractally on the higher time frame. That concludes our teaching for today. And happy studying. I'll be giving some homework in the group and some examples throughout the upcoming weeks. All right, to ingrain the knowledge in your heads. And I wish you all good luck and good trading.